How to make the most out of penny stock investing. Penny stocks are securities that trade for less than $5, and they can be profitable if addressed correctly. Their cheap share prices and strong volatility allow them to quickly accumulate a large percentage of profit. Hello everyone, and welcome to a brand new video on the channel. Today we are going to talk about how to make the most out of penny stock investing. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. High return potential. Penny stocks are characterized by their low entry fees, which makes them an attractive investment opportunity. A relatively minor increase in the price of a share can result in substantially larger percentage gains. It is essential to approach these companies from a strategic perspective since, despite their higher risks, they are also associated with bigger potential returns. Low entry cost. Because of the cheap price per share, penny stocks are accessible to investors who have a small amount of capital readily available. Because of this accessibility, investors are able to purchase a greater number of shares with a lower amount of money, which has the ability to increase the likelihood of big increases in returns. Adding penny stocks to your financial portfolio can help you achieve greater diversification. They are associated with a higher level of risk, but when combined with assets that are more reliable, they can provide a balance. Opportunity for undiscovered gems. Businesses that are just starting out frequently own penny stocks. Purchasing these stocks could mean getting on the ground floor of a firm that will go on to achieve great success in the future. Less competition. The fact that major institutional investors do not often spend their attention on penny stocks can result in a reduction in the amount of competition that individual investors face. Potential for quick profits. Penny stocks, which are known for their high degree of volatility, can present prospects for making quick profits. But in order to accomplish this, you need to be able to respond quickly to shifts in the market, which is a talent that can be acquired through research and experience. Researching penny stocks. Conducting research on penny stocks requires conducting an in-depth investigation into the operations and financials of small-cap companies. However, this can be difficult to accomplish because the information may not be as easily accessible or thorough as it is for larger and more well-established businesses. This comprises evaluating the business model of the company, analyzing its financial health, and determining the market potential of the items or services it presents. When it comes to various forms of trading, conducting exhaustive research is an essential need for achieving success. When it comes to trading penny stocks, developing a strategy is really necessary. This requires you to establish crystal clear objectives, ascertain your level of comfort with risk, and figure out how much money you are willing to put into the venture. It is important to keep in mind that the foundation of effective trading is a clearly defined strategy. Learn to read financial statements. The need to comprehend financial accounts cannot be overstated. They can provide you with insights about the financial health of a company, which can assist you in making informed decisions. The historical performance of the stock should be analyzed. Performing a thorough analysis of the past performance of a stock might reveal extremely useful information regarding its potential. If you want to determine the level of investor interest and market liquidity, you should look for patterns in share prices and trading volumes. A high level of risk is associated with penny stocks. Understanding the level of risk you are willing to take and investing in accordance with that level is essential. Trading penny stocks. Penny stock trading is a fast-paced and frequently exhilarating experience, but it also comes with its own unique set of opportunities and problems. Due to the fact that these stocks frequently display extreme volatility and little liquidity, it is absolutely necessary to have a trading strategy that is well explained in place. It is always my recommendation to traders that they approach penny stocks with a clear grasp of their position and the amount of risk they are willing to take. Additionally, it is essential to select the appropriate broker, as the costs charged by various brokers and the availability of particular types of stocks might vary dramatically from one broker to the next. Using stock screener tools. Utilizing stock screener tools can assist you in locating penny stocks that meet the parameters you have set for your investment. Through the use of these tools, stocks are filtered according to particular factors such as price, volume, and industry sector. Successful investors in penny stocks have a track record of earning profits. It is possible to gain significant insights by gaining knowledge from successful investors in tiny stocks. Investigate their tactics and gain an understanding of what is successful in the market. Having a solid understanding of the exchange and volume information for each stock. It is essential to have a solid understanding of the trading volume of a penny stock, as well as the exchange where it is traded. It is generally accepted that higher volumes are indicative of more liquidity and interest in the stock. One of the most important skills to have is the ability to estimate the price per share and calculate possible returns. This necessitates having an awareness of the subtleties involved in the price swings of penny stocks. How to find profitable penny stocks. The utilization of appropriate tools and the implementation of a methodical approach to analysis are both necessary components in the process of locating profitable penny stocks. When it comes to locating possible investments in penny stocks, scanners and other stock screening tools can be really helpful. On the other hand, the truth about investing in penny stocks is that not everything that shines appears to be gold. When it comes to understanding the true potential of a penny stock, something that I emphasize is that it is essential to dig beyond the hype and conduct extensive study. This typically entails delving beyond the numbers in order to gain an understanding of the company, its market, and any other elements that may have an impact on the performance of the firm. Using scanners to find penny stocks. Searching for stocks based on certain criteria, such as price movements, volume, or financial measures, can be accomplished with the use of scanners, which are tools. Within the realm of scanners, Stocks2Trade is at the top of my list of recommendations. This trading platform is extremely sophisticated and can integrate with the majority of the main brokers. I make use of Stocks2Trade to search for news, tweets, earnings reports, and other data, all of which are included in the robust news scanner that it provides. It is equipped with the trading indicators, dynamic charts, and stock screening tools that traders like myself look for in a platform. In addition, it offers a variety of add-on notification services, which allows you to stay one step ahead of the competition. It is necessary to have access to trustworthy information, to have a keen eye for market patterns, and to have the capacity to analyze and interpret financial data in order to locate valuable penny stocks. Acquiring an understanding of the patterns that appear on stock charts will assist you in locating prospective investment opportunities in tiny stocks. Keep an eye out for patterns that point to increases or decreases in the trend. Insights into the success of a company can be gained through the use of financial ratios. The evaluation of penny stocks can benefit from the utilization of ratios such as price to earnings, debt to equity, and return on equity. In order to make money with penny stocks, it is not enough to simply choose the appropriate stock. Rather, it is necessary to take a thorough strategy to trading. This includes conducting your research, beginning with assets that are less substantial, and diversifying your portfolio in order to properly manage risk. Penny stock traders that are successful, in my view, are those who steer clear of stocks that have been overhyped and instead concentrate on businesses that have solid business fundamentals. The inherent risks can be managed more effectively by establishing a budget and making use of tools such as stop-loss orders. A final point to consider is that in order to change your approach in the ever-changing world of penny stocks, it is essential to remain current with market news and trends. In order to be successful in trading penny stocks, it is essential to conduct extensive research. This includes having an understanding of the company, the industry it operates in, and the conditions of the market. For the purpose of reducing risk, start with a little investment. Because penny stocks are highly volatile, it is prudent to restrict your exposure to them while you are still learning the ropes. In order to reduce risk, diversification is absolutely necessary. Do not invest all of your money in a single stock or in a single industry. Be wary of stocks that have received an excessive amount of buzz because it is possible that they do not have solid fundamentals to support their price. When it comes to your investments in penny stocks, you should establish a budget and stick to it. This can assist you in avoiding losses of a major type. Stop-loss orders are a useful tool for risk management since they cause a stock to be sold automatically when it hits a predetermined price. The market for penny stocks is a dynamic arena. To ensure that judgments are well informed, it is essential to remain current on the latest market news and trends. That's the end of the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.